Even though he is resident, it is taxable. Even though he is not ordinarily resident, it is taxable. Even though he is non-resident, it is taxable. Any agriculture income in India is exempted. Anything which is like dividend received from Indian company, it is always exempted. Any gift received from your relatives or blood relatives, it is exempted. Hello everyone, I am your Adarsh sir, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. So we are in the topic called income tax, or we can also call it as tax management 1. Under tax management 1, we are in the session called 5. So as I told you, whatever the tough part we completed means your residential status is over. Now, whatever we are doing now, that is nothing but your incidence of tax. Now, so it is the easiest thing in your examination, you will get compulsory 10-mark question. So easily you can score, just you have to mention whether it is a taxable or not. We have 3 types of persons. One will be resident, like ordinary resident, first person. And the second person is called as resident, not ordinarily resident. And the third person, we call it as non-resident. Now, resident, ordinarily resident, resident, not ordinarily resident, and the final part is non-resident. Now, we will understand everything. We will understand the format. Later, we'll go for the problems. So, what is the agenda for the particular session? Very simple. The first thing is incidence of tax. Once you're done with incidence of tax, we'll go to the problems in your taxation, like incidence of tax. So this will be your format. So the heading is very simple. Calculation of income under residential status. Now, for example, first thing like income received in India. So, income received in India. Remember, even though he is resident, it is taxable. Even though he is not ordinarily resident, it is taxable. Even though he is non-resident, it is taxable. Remember this. We'll go for this second one. So, income earned in India. So, what is income earned in India? For example, your business is in India, but you are collecting money in abroad. But where your income is generated? Your income is generated in India. So, it is called as, for all the 3 persons, taxable, taxable, and taxable. What is this taxable, taxable, taxable? You will understand while doing problem. But now we just understand the concept. Anything which is received in India, it is taxable for everybody. Anything which is earned in India, it is taxable to everybody. Even though your business in Malaysia, Sri Lanka, anywhere, but received where? In India. So everybody is taxable. I'll give you best example. I already told you, for example, Chris Gayle, he played IPL in India. He won man of the match. Now, income, whatever man of the match he received in India or abroad, in India. So, he has to pay tax for that. You may ask, so when he will pay tax? Very simple. Our India government, what they will do? His income is 1 lakh. The cash price is 1 lakh. Example, what Indian government will do? They will minus tax like 35,000. Balance 65,000. They will give it to Chris Gale. Instead of collecting tax from him, they will only deduct and give the balance amount to that particular player. Now, so anything which is received in India, taxable. Anything which is earned in India, even though it is received outside also okay, but earned where? India, taxable for all three persons. Now we'll go for the third one. The third one is received and earned outside but controlled in India. Controlled in India. So very important. Received also outside, earned also outside. But complete business controlled by whom? Indians. In that cases, taxable, taxable, non-taxable. Third person is not taxable. Clear? Yes, we'll go for the fourth one. Income received and earned outside India. Outside India. So anything which is received also outside and earned also outside. Then what will happen? Only first person is taxable. Second and third person is non-taxable. Remember, received also outside, earned also outside, controlled also outside. Then only first person is called as taxable. We'll go for the next one. Fifth one. Any agricultural income, any dividend, if it is Indian, like the land is in India, the whatever dividend giving company, that is Indian company, then exempt, exempt, exempt. Remember, any agricultural income in India is exempted. Anything which is like dividend received from Indian company, it is always exempted. Now, next one. If the same thing, agricultural income or dividend income from foreign company. Foreign company. First person taxable, second and third person, it is non-taxable. If it is received outside, if it is received India means everybody, it is taxable. Clear? Anything like agriculture or dividend income from foreign, received also there, first person taxable, second and third person non-taxable. The last one, past untaxed foreign income. So it is exempt, exempt and exempt. So these are very important. What I told you, the 10 marks problem you will get from incidence of tax. If you learn this format, your 10 marks problem is done. Along with that, you have one more thing, that is gift received. Now remember, if it is gift received, very simple, from relatives on occasion of marriage. And the third one is outsiders. Now, any gift received from your blood relatives, it is completely exempted. So, there is no tax on gift. Like, you got 10,000 cash from your dad, exempted. You got 50,000 cash from your uncle, exempted. You got 80,000 cash from your aunt, exempted. You got from 50,000 from your brother, exempted. Any gift received from your relatives or blood relatives, it is exempted. Then marriage, on occasion of your marriage, even though it is relative or other than relatives, like your friends, colleagues, your neighbors, So whatever they have given, even though it is 1 crore also, it is exempted. Next, anything you received from outsiders as gift. Remember, up to 50,000. Up to 50,000, it is exempt. Above 50,000, we call it as taxable. Hope you are clear. Up to 50,000, exempt. Above 50,000, we call it as it is taxable. Clear? This we call it as residential status. Now, so under residential status, this is nothing but incidence of tax. Please write down this or else take screenshot. So later in your book, you have to write down this format. Yeah, every problem based on this only. Write down this, I'll go out of the screen. So this is all about your format. Whatever problem we are going to do, it is on the basis of this only. Now, this is your problem number 1. We'll come back to your problem number 1 later. First, we'll solve problem number 2. Then we'll come back to problem number 1. So, this is your problem number 2. Apply the same rule what I have given. Now, received rupees 1000 in India. Remember, received in India. Go back to format. Income received in India. What it is? Taxable, taxable, taxable. Clear? Remember that. Received in India, taxable, taxable, taxable. We don't want further accrued in England. Nothing is required. If you find a word called received in India, whatever may be the further information, it is taxable for all three. Next. Rupees 2000 earned in India. Again, earned in India. Again, I'll go back to format. As per the format, income earned in India. Irrespective of further information, it is taxable for all three. So, this will be taxable, taxable as well as taxable. Third one. Rupees 10,000 was earned and received in Africa but bought to India. So, received where? Outside. Earned where? Outside. Controlled? Outside. So, what it will be? So, taxable only for one person. If it is controlled by India, then at least 2%. Clear? Yes. 8,000 were earned and received in Japan, and this amount was bought to India. Bought to India will not consider anywhere. So received also outside and also outside. Only for one person. Only for one person it is taxable. Next. Rupees 6,000 was untaxed foreign income of some earlier year. As I told you, untaxed foreign income, what it will become? I'll go back to your format. See, past untaxed foreign income, what it will happen? It is exempted. So, your past untaxed income, exempted, exempted as well as exempted. It is not taxable in any cases. Next. So, which of the above income are taxable when Mohan is a resident, not ordinary, and resident and non-resident? We'll go for the answer. Everything we discussed here itself, still we go for the answer for the confirmation. Now, see, your answer must be like this. The heading must be income taxable on the basis of residential status. Now, received in India, accrued in England. Taxable, taxable, taxable. Why? Because received in India. That word is important. Then, earned in India. If you find earned in India, taxable, taxable as well as taxable. Next. Earned and received in Africa but bought to India. Bought to India, it is immaterial. We will not give importance, but received also, earned also outside. First person taxable, second and third person it is non-taxable. Now, earned and received in Japan from business. Everything is outside only. First person taxable, second person and third person It is non-taxable. Next, untaxed past income. As I told you, it is not taxable, not taxable, not taxable. So this is only for learning purpose. In your examination, whatever amount they have given, 1,000, 2,000, 10,000, you have to mention in the table. From the next problem, we'll go with as per the examination. Now, it is only for understanding purpose how to calculate. Now, so this will be your answer. I'll come back to your problem number 1. This will be your problem number 1. In this, they have asked only resident in India and non-resident. They have not asked 3, they have asked only 2 now. But in your examination, they will ask you all 3. Now, income from house property situated in London. So, it is in London means only 1% will be taxable. Income from salary received in India. Everybody taxable. No need to read further. Profit from business in London controlled from India. As I told you, first 2 persons. Third person is exempt. But in this we are preparing only first person and third person. Now, profit from Kanpur. Where is Kanpur? Kanpur is in India. So, all the persons are taxable. We'll go to answer. See, income from house property London, taxable, nil. Income from salary received in India, taxable, taxable. Profit from business London, controlled from India, first person taxable, second person taxable. But we are not preparing second person. Third person is exempt. Profit from Kanpur business, agriculture income in India. So, profit from Kanpur, taxable, taxable. Kanpur is in India. And the last one, agriculture India, as per the format what? Agriculture India and agriculture income as well as dividend from Indian company. These two always we call it as exempted. If it is a foreign company, then first person is taxable. Received in India, all the 3 persons are taxable. Now, this is all about your answer. Now, total everything 40 plus 28, 68 plus 120, 188 plus 110. It will be 2,98,000. Similarly, 28 plus 1,10, 1,38 plus, so we have nothing. So your final answer is 1,38,000. Now, I'll go back to every slide so that you can take screenshot. So this is already taken your format. This is your problem number 1. Solution for your problem number 1. This is your problem number 2. So this is a solution for your problem number 2. So this is all about your today's session. As I told you, in the next session, we will go with your question paper problems. We'll do around 3 to 4 problems in the next session. All the problems will be your question paper problems. Thank you.